Hello traders, Gary Wagner here. Just about 11:30 in Honolulu, 4:30 in New York. It is Wednesday, first day of February 2017, and this is the Daily Report for Gold and Silver. Fed meeting concludes today with a basic statement in which they will leave interest rates unchanged. That news was slightly favorable to the precious metals, which had been trading under moderate pressure today, as well as the equities markets. Gold, which did trade to a low today of about $11.99, and we are looking at the continuous contract of gold futures, which is now reflecting the April contract, closed at $12.1080, putting it off about 60 cents on the day, very nominal change. The high, $12.15, and the low, $11.9970. Of course, we are long gold from approximately $12.03 on the day. Now, silver also pared much of the losses, although it closed in essence unchanged today at $17.53. Net change, as I said, is just a little bit over 1 cent. Nominal fractional changes in both gold and silver pricing. So traders, as you know, we did put on an active trade at the beginning of this week, initiating long positions in gold. We got in roughly at $12.03, and in fact, the chart that we sent out during the actual trade alert itself is the chart that I've just put up on the screen. One thing that you'll see is that there was a couple of pieces of criteria that were critical to really initiate the trade. First of all, as this market began to trade lower, and it traded under pressure from about $12.20 all the way down to these lows here at about $11.80, that was a 38% retracement, which was real key and critical because as this market sold off, it obviously broke below the 23% retracement, which comes in right here. And then as it fell, it actually fell slightly below the 38. You can see these lows here, and then recovered quite eloquently. So that was the first indication for us that there was a pretty good potential trade underway. However, until we had a stronger piece of technical confirmation, I really didn't want to enter the market. And so what I was looking at was a level at the 23% retracement point. And then when we look at it historically speaking, we can also see where it has provided key levels of support in the past. But once the market dipped and then broke back above this price point, that is what prompted us to get in right in here. And so that is why we got in roughly at $12.03, or roughly right in this area. Now, market's sitting about $7, $8 higher than that. It's come up. We've seen some real resistance at about $12.15. And I don't really see any real resistance until we start to challenge these tops here. But after this slight correction, and I think that the correction that we witnessed, this of course is a 1 hour chart, but the slight correction that we witnessed here and subsequent recovery was simply profit taking within the marketplace itself. Which brings us to our next chart, and the chart that I am looking at is a daily chart, standard bar chart, but I have updated the actual fib extension that we have been using to better highlight our particular targets. Because on this extension, originally, I had marked the bottom of the extension, of course, at 11.23 and the top at 12.20, but I marked the beginning of the extension really at a 61% retracement because I had felt that there was a possibility as we were creating the model that we would in fact see pricing go to that point. However, what I have done at this point now is to really amend that. And so we've got our basic fib extension covering this particular rally. And then we begin the extension really from this price point here at 11.80 and then begin to forecast up. Now, what that does obviously is it's going to change our target prices. So that my sense right now and what I'm looking for at minimum, and this won't be on one single rally. We should get a series of peaks and valleys, so to speak. But 1281 is now my target. That is simply based upon the model, which is saying that this wave 1 right here and our current impulse wave, which we'll be labeling a wave 3, are going to be about the same. If not, the 3 must be bigger. It can't be smaller according to Elliott Wave modeling. In terms of the upside best potential, that would have to be the 101.618. So it's a rather large extension, but you do get this on a dramatic rally in gold where you will see that third wave extend to that particular price point. So our target stands right now at 1281. Recommendation: maintain your current long position, maintain your current stop. In other markets that we follow, the equities markets did react favorably to statements made by the Fed today, with the Dow Jones Industrial Average ending a 3-day losing streak or lower pricing over the last 3 days to close up about 26 points at 19,890. Standard & Poor's, very, very similar gains, nominal gains, 2279. But the star of the equities markets today, or once again, I should say, has to be the NASDAQ, with the NASDAQ closing up 0.7% at 5148. This, of course, being the E-mini. And then lastly, do want to look at dollar pricing. Dollar pricing slightly firming to the upside, 99.71. So traders, in other markets that we do follow, I draw your attention to the screen. We've got a daily chart. This of the NASDAQ 100 E-mini futures. We are certainly not yet in an area where we're going to a new record high. That comes in right around here at 51.69, but we're only about 20 points away from there. But what you can see when you take a look at this chart, and of course, this is the sector that has been outperforming both the Dow as well as the Standard & Poor's, but after this dramatic price ascent, we really had 3 days of lower pricing. Even though this is a green candle here, it did close lower than the prior day's close, that doji there, 3 days. And now we've got, at least for now, a subsequent support level being found, and we could in fact see the market move to higher pricing from here. So traders, as far as the dollar index goes, and we are looking at a Japanese average chart, each candle representing 1 week in time, we're still absolutely on the bigger picture in bearish territory with a bearish bias to the market. Now, dollar did close fractionally higher on the day, but it's still trading below 100. It is at 99.70. And if you recall from yesterday's show, we talked about the next real level that we would want to see if the market continues under pressure is this 38% retracement, and that comes in just at about 99. Of course, below that would be 97.70, and that is a 50% retracement. But I do believe that the dollar could continue to trade under pressure. So traders, midweek, we are recommending that you maintain your current long position in gold and to maintain your current stop. In terms of levels that we want to watch closely over the next couple of days, of course, 1220, that's these most recent highs. Obviously, we need to take those out. I don't see that as being too much of a problem. And my initial upside target for this rally comes in at around 1250, and that is that 38% retracement of this larger rally that occurred really at the end of 2015, beginning of 2016, culminating with the highest high that gold traded to last year. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review.